because I want to take a look at Canvas and I want to take a look at the syllabus. Our first midterm is right now scheduled for October 8th, which is a week from today. And I'm looking at that and just facing reality. We are not going to be ready for everything that was contemplated to be on that test by the 8th. So I'm going to make a change, which is the midterm will only cover chapters 1 through 4. Okay, so we're going to finish up hopefully chapter 4 today, and then just have the midterm cover those 4 chapters, so we're not trying to squeeze another chapter in with not enough time to the midterm. So it'll only be chapters 1 through 4, and then I'm going to propose that we have it on the 10th rather than the 8th, unless there's just an overwhelming objection to that, to give us one more day. Okay, that gives us one more day together prior to the exam to make sure we're comfortable with all the material, and then we'll do it on the 8th. Okay, so just to take a little bit of the pressure off, because I feel like we're maybe moving a little too slow, I don't know, but definitely at this point, you know, we got to go with what we got here. So I'm going to put it on 10-10 then, guys. Yeah. Okay, so that'll be midterm 1, chapters 1 through, and it's not going to include chapter 5. It's going to include 1 through 4. Okay, and I'm doing this in hopes that we will be able to, you know, have maybe like 2 classes to review next time, and then Monday to do some review before the exam. Now, that doesn't mean you shouldn't study over the weekend, obviously. I mean, don't wait till Tuesday night to study everything. But we'll be able to go ahead and have the midterm 1 on 10-10, and then midterm review on the 10th. That's just where we'll go over it. And then we'll be obviously jumping into chapter 5. Okay, and that obviously these days are gone, so we can strike those. I'll just put chapter 4 on these. I don't know if that's exactly when we talked about it, but just so there's no confusion. Chapter 4, 10-3 midterm prep, 10-8 midterm prep. Any question for guys that just walked in? We are pushing the midterm back to the 8th. That's Wednesday instead of Monday. To the 10th, that's Wednesday instead of Monday next week. And we are going to only have chapters 1 through 4 instead of chapters 1 through 5. Any question? Okay, good. I'll go ahead and post up the revised syllabus a little bit later, maybe later today. You'll see that on Canvas. So let me label that as revised, and let me save it before I forget to save it. I'm thinking 20 multiple choice and 1 free response. Maybe 15 multiple choice and 1 free response. So 15 or 20, I don't know which yet. Maybe 15. 20 might be too many in the amount of time that we have combined with a free response. So 15 free response and 15 multiple choice and 1 free response, with the distribution of points being like 80 points towards the multiple choice and 20 points towards the free response. Okay. I'm thinking most likely I'm going to give you a set of information and ask you to prepare a multiple step income statement. So I'll give you information about sales, cost of goods sold. You'll have to know that that thing gives me gross profit. Then you're going to have to know which ones would be operating expenses that would be pulled out, which ones would be non-operating. I'll probably give you a little discontinued operation action in there. Expect you to be able to calculate the earnings per share. They would show up on there, that sort of thing. But I will have a problem like that for us to look at probably on. I probably will get to it on Monday because we're going to go through a bunch of multiple choice questions for the practice midterm that I'm going to show you in a minute. And then I'll put up some more multiple choice questions for a second practice midterm, but probably most of the focus being on how to solve a full-blown multiple step income statement. And then you'll have that on the exam. Huh? Well, my concern is because I'm going to give you a full-blown problem. So my concern is that I understand the batting average aspect of it, but there's also do you have time issue? And so if I give you 20 multiple choice, then you're going to have to work those and still do the free response, right? And so then we start running into time. So I understand 15 is kind of scary because if you miss, 2, 3, you're already, potentially suffering, not able to get an A off of that. But you can recover those points in the free response. And the beauty of free response is I can give you credit for things that you get right on that free response, whereas multiple choice, it's either wrong or right. So that's why I'm going with that approach. Okay. Okay, good. So I can just save that there. Any question on that? Any other thoughts you want? I mean, if you want, I can give you, 25 multiple choice questions. Take it home? Notes? No. Accounting is a closed book subject, guys. If anyone let you take an accounting class with open books, they weren't treating you right. They weren't training you right. Okay? Maybe you liked that person when you walked out of the room, but they were not preparing you for where we're going. Accounting is not an open book test taking subject. CPA exams closed book. You walk into the CPA exam like this, hoping that nothing spills out of your head, okay? And you go in there and you take the test. So I'm training you to that level. I'm not going to baby you and train you to a level where you're not going, okay? And so yeah, no notes. The beauty is I don't ask you, in my opinion, dumb things. Of course, if I thought they were dumb, why would I ask them? So that's not a very objective measure. But I try not to ask you things like, who discovered America? I mean, they're usually things that we've talked a lot about in the class and should really be sort of floating around in your head. Now, that's if you come to class. You got people that miss class and aren't here for discussions and stuff. That's their problem. That's life. Half of life is half of the challenge in this business is showing up. So people that miss class and stuff, I got no sympathy for. You hear that? Okay. All right. So any question on that? Uh-huh. Yeah. Yeah. Yes. Because I put some CPA questions on the quizzes themselves. So yeah, it's going to be like those. I mean, you start to see a rhythm of the nature of the type of questions that I'm asking. And so I would say doing well on the quizzes and knowing the information on the quizzes is a good way of knowing what to do on the test. In those files, you can unhighlight the highlighted answers in Word because I post the quiz up in Word. You know how to do that, right? How to unhighlight the highlighted. And then take it like it's a test. Print it out, whatever, and sit there and see if you can take it without the answers highlighted. And if you're doing well in that, you should be able to do well on the actual test itself. Scantron. You bring a Scantron. This one. You've all seen it before. Skinny green. 50 response choices on the front, 50 on the back. Form number 882E. Okay. All right, guys. Any question? Any other question on that? Uh-huh. No. Multiple choice. 4 multiple choice, 1 free response. It's a mini CPA exam. CPA exam has 4 option multiple choice questions. I may have all of the above. I don't know. CPA exam does not. Each answer stands alone. So I may have a few that are none of the above, all of the above type of thing. I tend to not like those questions. But if I see one that I think is fair game, I might put it. Yeah. So no, looking at the practice quizzes that we've had for the first 4 chapters, for chapter 4, the nature of the questions were embedded in the slides themselves. Okay, but the quizzes for chapter 1, 2, 3, those were separate files frequently, but sometimes I did embed questions. So all of that, chapter 1, 2, 3, 4 slides, any questions embedded in the slides, the quizzes for chapter 1, 2, 3, 4 that are a separate Word file, those are all excellent preparation tools. And then today I have posted the first practice midterm 1. Okay, and with any luck, we will get to that today, starting some of those questions today. If not, we will definitely do them next time, and then Monday is when we'll probably look at that free response question, and then you'll be on your own. You're up on Wednesday. Okay, but these are questions from the different chapters so far that we have covered, and I'll add some more because I think I need some more chapter 4 coverage in here. So I might add in the second file, just so we have time, maybe 5 to 10 more multiple choice questions and a free response question, and that file will be up there tomorrow, but I don't know that we'll get to it until Monday. Question? And then there's the homework. I mean, if you've got the textbook, you could also look at the homework questions in the textbook as well, right? If you bought the textbook and the software, that stuff's there too. And of course, you've got the textbook, you've got the slides. Okay, guys, let's go ahead then and get ourselves into chapter 4. And we've already been in it, but I just want to review a couple things. Remember that we talked about last time. Remember we talked last time about the multiple step income statement. Multiple step income statement showed us what? Showed us our sales minus our cost of goods sold, gave us gross profit. Then we listed our selling and administrative expenses. Then we had what? Other expenses, losses, and all of these things were income from income from operations, right? Then what? Then we would have our non-operating items, such as interest expense, classic example of non-operating items, and then we would have our income from continuing operations. So our income from continuing operations consisted of operating items and what? Non-operating items, and then we called out tax separately. Then we had what? Then we had a series of discontinued operation items. And remember, when we get to discontinued operations, that's because an entire segment of the business is going to be disposed of, right? Okay, so we take the results of the entire operations that have happened from those discontinued operations, and we place them down here. When we report them, remember we report them net of tax. We back out the tax effect, and we report them net of any applicable income taxes, right? Okay. Now, in this example, they called out separately the loss from the operation, the loss on disposal. We could also have what? A impairment loss that would show that would be part of this. The only one of these that has to be disclosed of the 3, the loss from operations, the impairment loss, the disposal gain or loss, is the what? Disposal gain or loss has to be disclosed somewhere. In the footnotes to financial statements are on the face. Then you get your net income items, and then you have your per share amounts, right? Okay. And remember, if we had weird things that happen, we would show those as a separate line item on the financial statements. Okay. So we went through that, and we talked about items that constitute our continuing, right? Then what? Our continuing operations were made up of operating, non-operating income tax. Then we had our discontinued operations. We could also break out non-controlling interests, and then we would have our earnings per share information. Okay. Okay, good. And there's another view of the multiple step income statement: operating, non-operating, and tax. This is probably a good one for you to use. Okay, I'm going to put some stars on that one. Am I putting, those are stars, not creepy spiders. Okay, it's not Halloween yet. Okay, so I'm going to put some stars on that one. That would be a good one for you to practice with. Just knowing that if you have discontinued operations, you'd have to report income from continuing operations, and then what? And then continue on with your discontinued items. Question? Okay, good. Okay, so what I want to do then is come over, and we got to the discontinued operations section of our discussion. And again, discontinued operations consist of what? Impairment loss, loss from operation, and gain or loss on disposal, right? We take those amounts in the period in which they occur. So even though a question may be telling you it's not going to happen until next year, you do what? You wait until next year to take it, right? When a question tells you that, you don't include it in this year. The amounts are taken when they occur. They are taken what? Net of tax, and we have the discontinued operations section separate from the rest of the income statement, right? Okay. Okay, good. We talked about impairment loss. Impairment loss is the difference between the book value of the assets and the fair value of the assets if they have fallen below the book value, right? And we gave the fair value has fallen below the book value. We gave you that example. Okay, so what I want to do is, we went through this example, didn't we? We went through this example? Okay. Okay, good. So rather than repeat that, let's just go ahead and start to learn from some of the questions, or review ourselves from some of the questions for this, because I don't want us to get stuck again and not finish, at least finish chapter 4. So on December 2nd, year 1, Flint Corporation's Board of Directors voted to discontinue operations of its frozen food division and to sell the division's assets on the open market as soon as possible. Now you're sitting there and you're saying, well, what am I supposed to do with all that upfront information there? Well, remember that we said that if when we consider a segment held for sale, it's part of the discontinued operations. And when we consider it part of discontinued operations, I told you management is serious. So those are all words to let you know that management is serious about getting rid of this segment, right? Okay. Then we go on and it says, sorry, I got a little dry here. The decision represents a major shift for Flint and will have significant effect on the operations and financial results. Again, management is serious about doing this, right? So we come over and then we say the division reported net operating losses of $20,000 in December and $30,000 in January. On February 22nd, year 2, sale of the division's assets resulted in a gain of $90,000. Assume that the frozen food division qualifies as a component of the business, and ignoring income taxes. Now they tell us to ignore income taxes because there could be some questions in which we will see an income tax rate and we'll have to figure this out net of tax, right? But for this question, we're getting to ignore the income taxes, and then they're telling me, using all this information, what should we report for discontinued operations in year 2? Now again, we take these amounts in the year in which they occurred, don't they? Now even though this question didn't ask me for year 1, what occurred in year 1, what occurred in year 2. I know the question didn't ask year 1, but I'm going to go ahead and, for higher education purposes, we'll go ahead and we'll also consider year 1 here. Okay, so lid is the loss on operation, impairment loss, and disposal gain or loss, isn't it? Okay, so you look at year 1, and they say that in December, the division reported net operating losses of 20,000 in December. That's year 1, isn't it? So since those losses occurred in year 1, they are taken in year 1. Good. Then what? Then they tell us that there was 30,000 in January. That is of year 2, so that goes in year 2. Good, guys. Oops, we don't need that many zeros. And then we say that what? Then we say that the sale of the division's assets resulted in a gain of 90,000. Now that's a gain on disposal, isn't it? Of 90,000. So I've got losses of 20,000. Can I write down here? Yeah. Of 20,000 in year 1, and what? Net gain of 60,000 in year 2. So the answer here should be 60,000. Okay. Okay, good. So I think it's a good idea to set up these questions the way I'm showing you here with this mnemonic lid, and then just sort of turn the question into a fill in the blank as to what items qualify as which. Okay? Okay, good. Let's try another one. On November 1st, year 1, Smith Company contracted to dispose of its industry segment. Throughout year 1, the segment had operating losses. These losses were expected to continue until the segment's disposal. If a loss is projected on final disposition, how much of the operating losses should be included in the loss from discontinued operations in year 1? And notice they give us choices here that break the losses from year 1 into tranches dealing with what? The period before the decision versus the period what? After the decision? See how they've done that to you? Okay. Now, should we include all of the losses from year 1 in discontinued operations, or only those that occurred after? Huh? All. Everything goes down there, right? Before the decision, after the decision. Remember, the objective of reporting discontinued operations is to show the users of the financial statements what our income from continuing operations will look like after this thing's gone, right? So they can get a sense as to the permanence of our earnings. Okay, how permanent do we think earnings are? Okay, and so the answer here has got to be what then? 1 and 2. So it's got to be C. Okay, now don't freak out. Freak out alert. Because when I steal this from the software, if I go back and look at the question, because sometimes I forget to put the answer in there, and I want to put the answer, but the software shuffles the answers on me so that I don't get the same answer again the second time. So I had originally put this in there when the correct answer was C, and then when I said, oops, I forgot to put the answer, it had shuffled it down to D. But it's still 1 and 2, right? See what happened? Sometimes I forget to cut and paste the answer in, and then when I go back and try to find the same question again and do it again, it shuffles the correct answer on me. I guess they do that so that people don't memorize the letters associated with the correct answer. Question? Okay, good. Let's go ahead and let's take a look at this one. October 1st, host company approved a plan to dispose of the company's operating segments. The decision represents a major strategic shift for a host and will have a significant impact on its operations and financial results. Blah, blah. That's just telling us they're serious. It's going to be discontinued operation, right? And you kind of know that because that's sort of what we're talking about here, right? So when you see those words on your test, you know you got a discontinued operations question, right? Okay. Now, host expected that the sale would occur on April 1st, 20x5, that's the next year, at an estimated gain of 350,000. The segment had actual and estimated operating losses as follows, and they want the X4. Now, I don't think you mind if I go ahead and do, what is it, X4 is the first year in this pattern, and we also have X5. So I'm going to do both of them. I'm going to go ahead and use my little mnemonic lid. We're going to blow the lid off this operation. We're going to get rid of it. And so let's go ahead and take a look at the X4 losses. Now again, notice that this problem is trying to trick you into thinking that there's some sort of distinction that should be made of those that happened before the decision versus after the decision. We know the whole results of operations go down there, right? So that's how much for X4? 500,000. Good. Then what? They tell us that they don't finally dispose of this until there's nothing about impairment, they tell us here. And they tell us that they don't dispose of it until what? X5. So in X5, they tell me that that they would have the estimated gain of 350. That's the gain on disposal. And I'm looking at this problem. Did they tell us anything about operating losses continuing into the next year? No, they don't say that, so I don't assume it, right? Okay, but bottom line, they don't give us the amount for X5. The correct answer here is what, 500,000 for X4? Okay. Okay, good. Let's try another one. This one actually has the 2 years. Okay, so this one you get a 2 for 1 here. January, year 3, agreed to sell its assets. The decision represents a major strategic shift, blah, blah. The sale was completed on January 15, year 4, and resulted in a gain on disposal of 900,000. Hart's operating losses were 600,000 for year 3 and 50,000 through January 15th, year 4. Again, the reason they tell us disregarding income taxes, and some questions will say that, some won't. If I don't give you an income tax rate, guys, you can't figure out the net of tax. So, okay, if that's the case, then you just don't worry about it. But we got X3, we got X4, don't we? And we're going to go ahead and set this thing up. And so we have what? X3. How much did they lose in X3? 600,000. Okay, good. That's the loss from operation. And then what? 50,000 in year 4. And they don't tell us anything about impairment, but then they what? Sold it for a gain of 900,000 in year 4. Okay, so that's going to be 900,000. That's a positive. So negative 6 and positive 850. A. Okay. So these aren't too tough. CPA exam questions, you can handle them. Okay. All right, good. Let's go ahead and let's take a look at this one. The company has a 30% effective tax rate, and they want us to go ahead and figure out what is the net income for year 2. Okay, now this is basically asking us, whether they've called it out or not, to give them a multiple step income statement, isn't it? Okay, so let's go ahead. Let's see if we can do this. You guys were pretty good at the magnet game the other day. So let's go ahead and take a look at my income statement. I start with my sales. My sales are what? 3,600,000. Cost of goods. Oh, wait a minute. I got sales returns. Okay, returns. Good, guys. You helped me with it. 34,000. Okay, that's sales returns. Let me write that a little bit better. Sales returns. Okay, good. Anything else? Okay, so sales returns, we'll just, to be a little bit neater here, we'll call that net sales. Anybody got a number for me? 33,600,000 divided, subtract 34,000. Come on, guys, calculators. We don't have all day. 3,600,000 minus 34,000. Huh? 3,566,000. Okay, great. Thank you. Cost of goods sold now. right? 120,000, 1,200,000. Okay, I subtract that, and that gives me 2,366,000. You say? Okay, good, and that's my gross profit. Okay. Well, since it decided to change, let's see. Are we good so far? We're good? Okay. All right. Good. Okay. Then what? Huh? Selling and administrative expenses? I'm just going to abbreviate that. Sell plus admin. That's 500,000. Okay. Then what? I'm looking at this. I don't see anything else that represents a operating expense to me, operating items to me. So I'm going to go ahead, subtract off my expenses, and I'm going to have operating income now. And my operating income, I don't want to write it over that number. We're going to need that number. Operating income is what? 1,866,000, you say? Okay, good. We got our operating income. Then what? We've got gain on sale of available for sale securities and unrealized gain on available for sale securities. What's the difference between an unrealized gain and a realized gain? Huh? In one case, we've had the situation where what? The value of the security has dropped, and so we've marked the value of the security down, but we haven't sold it yet. That is an unrealized gain or loss, isn't it? Because we haven't sold the security yet. So if we have a change in the market value of a security and it's available for sale, debt security available for sale, what do we do with that? The security had a fair market value, I'm just making this up, of 6,000 at the beginning of the year, 1/1. And by 12/31, come on, you damn thing. By 12/31, it had a value, what is it, a gain? This one right here, of 8,000. How do you want me to deal with that? Available for sale debt security. Balance sheet income statement, guys. You're accountants, right? So you need to think about the impact on the balance sheet, the income statement. I mean, these are the financial statements that we're here to show that we have knowledge about how to handle these things. How do you handle it on the balance sheet? Balance sheet. Looking at the solution is a good thought. I don't criticize you for looking at the solution. What happens on the balance sheet? Fair market value of the security was 6,000 at 1/1. Now it's 8,000. Huh? On the balance sheet? Show it on the balance sheet. So I'm going to do what? Debit, credit. Good. I'm going to debit the security for $2,000 because it's gone up, hasn't it? Now I'm right in the middle of my income statement. Let me do it over here. Debit security for 2,000 because it's gone up, hasn't it? Okay, what do you want me to credit? That's on the balance sheet. That'll make it now 8,000 on the balance sheet, which is what I want, right? Okay, what do you want me to credit? I already debited. That is the debit. Debit to security. What do you want me to credit? It's a gain. It's a gain. Where do we report gains? Where do you report gains? Huh? Okay, so I'm suppose you want to credit gain to some extent, don't you? The question is it a normal gain? It's an OCI gain, isn't it? Okay, so I'm going to credit OCI gain for 2,000, just kind of squeezing it in there. Debit security 2,000, credit OCI gain 2,000 up there. You can see it's kind of creeping into our income statement a little bit. But that is not part of my net income. That is part of my comprehensive income. Remember, we take net income plus our other comprehensive income gives us comprehensive income. So that's an OCI gain. Okay, good. So do I report that here in the calculation of net income? I do not, so I can ignore that. How about gain on disposal of a discontinued business segment? Well, that's going to be part of my net income. It's going to be part of my discontinued operations, isn't it? Okay. So do I have any other operating items up here? We have what? Oh, did I say operating items? I just said operating items, so you're right. I don't have any more operating items, but I do have what? This gain on available for sale security. That's going to be a non-operating item. So when I report my non-operating items now, I'm just going to call it out because it's the only one. Non-operating gain here. That says non-operating gain, and the non-operating gain is how much? 8,000. So I'm going to stick that in. Anything else that's part of continuing operations? Adjustment for a prior year understatement of amortization expense, guys, is going to be a prior period adjustment. If we made a mistake in the prior year, we correct last year's statements. We don't report that on this year's statements. That's a mistake that affected last year, didn't it? So we don't worry about that for this year. And so now we have what? Now we have operating income from continuing operations, excuse me. Driving me nuts. Income from continuing ops, and what's that come out to? 186 plus this gain. Why is that not sounding right to me? It's 187.4, you say? Okay. Even. 1870. 74. 000. Okay. Too many zeros. Okay, good. So there's our income from continuing operations. Now, do we have any discontinued operations? We have the discontinued ops, and but we have to do our tax now, don't we? So we take the 1,874,000 and we multiply that by what? 0.3, and that gives us the tax. Huh? No, I can't. It's not net of tax. It's I have to report the tax. I have to take the operating income from continuing operations and figure out the tax on it, which is the income from continuing operations times the tax rate, right? 0.7 is how I get the after tax. So this is 0.3. So what's this? 1,874,000 times 0.3, please. Huh? Okay, good. And now I can do what? So I have my what? I have my income from continuing operations after tax. And so this would be before tax. So when I subtract off the income tax, I get what? I'm sorry? 1,311,800. Okay, good. Now I can do what? Discontinued ops. I'd probably have a section header there, but that's okay. Discontinued ops. And I've got to take what? Gain on disposal of discontinued business segment of 4,000. And now I can do that move that you were talking about, which is to take the 4,000 and multiply it times 0.7, 1 minus the tax rate. So that's 2,800. That's a gain. So I add that in, and now I've got my net income, right? Now I've got my net income. So net income, I add that to the 311.28. Hopefully I get this 314,600. 1,314,600. Huh? Which is the right answer there. Okay. So that's a little hard to read, I understand that, but I just wanted to kind of go through it with you, walk through it. So now when we look at the better printed solution, you can basically see that we did what? They took the sales, gross sales, and backed out the sales returns. We kind of showed it as a separate line item, but that gave us the net sales, 3,566. Took off the cost of goods sold. That gave us our gross profit. Took off the selling and administrative expenses. That gave us what? Operating income of 1,866,000. Okay. Then came what? Then came this other gain, which was the $8,000 of the gain from the what was it? Sale of equipment or something? Did they say what it was? Oh, for available for sale securities, right? Okay, and that was the realized gain. Unrealized we ignore, right? Because we haven't sold that security yet. Okay, and then that gave us the income from continuing operations. Then they took out the income tax expense. Again, careful, don't make that mistake. You multiply it by 0.3, right? Not 1 minus 0.3, not the 0.7. That gives me the income tax. Then I have income from before discontinued operations. So I guess I should have called it income before discontinued operations instead of after tax. And then the gain from the discontinued segment is, of course, net of tax, and that gave us the right answer to that question, net income, right? Okay, so this one was sort of a long multiple choice question, but I could easily turn this into a full-blown free response question, right? And I will. I'll probably give you something just like this and expect you to be able to sit there and prepare the statement like I did, sort of scribbling here on the side with that same set of information. Question? Okay, good. Non-controlling interest. Remember, I'm just putting this up because I think I'd made a mistake where I had shown the non-controlling interest as a subtract. Actually, we break it out separately as part of our stockholders' equity on the balance sheet. But the takeaway here is that if I mean, I admire somebody that can sleep sitting that close to me while I'm talking loud. That's pretty good. Okay, so you come over and you take a look at this one, and this is the income statement, which is what we're talking about in this chapter. And notice here the non-controlling interest is backed off. The non-controlling share of the net income is backed off. So we report our net income gross, and then we do what? Subtract out the non-controlling interest share of the net income. Just a presentation issue. I'm talking to all of you just because I look over there. Is it a presentation issue? This is just a presentation issue? Huh? Yes. No, I'm kind of saying it's a presentation issue, and I'm only slightly raising the inflection of my voice for presentation purposes here. We give the whole net income gross, don't we? And then we back off the non-controlling interest share. That's a presentation issue. They were just showing you, hey, here's everybody's net income. Here's the part that belongs to non-controlling interest, right? Okay. Okay, good. I'll make sure and ask a full 10-point question about that. Now, do you have any question about it? Okay, good. I'll put a 15-point question on that since you all understand it so well. Okay? Okay, good. Come over and you look at earnings per share. Earnings per share is very easy to calculate. It is net income minus any preferred dividends, and then we will divide that by the weighted average of common shares outstanding. I will not make you calculate the weighted average of common shares outstanding in this class because you get more into that in the next intermediate 2, but I will tell you what the WACO is, or WASCO, whatever they call it, weighted average common shares outstanding, and you'll have to know that you take the net income. I'll tell you what any preferred dividends are, and then you've got to be able to calculate the earnings per share. Okay, and that shows up on the face of the income statement, guys. So when I give you that full-blown problem where you're going to have to give me a multiple-step income statement, I'll give you the information to calculate the earnings per share, and you're going to have to know to include that on the face of the income statement down there near the bottom, right? After everything else, you report that. I guess you'd have to report per share amounts for discontinued operations too. So you'd have to take the discontinued operation gain or loss, whatever it is, divide that by the weighted average shares and give me the amount of report the amounts per share for discontinued operations. Okay, change in accounting estimates. What happens here? Company has a situation where they buy a piece of equipment, and they think that piece of equipment is going to last 10 years. They start to use that, maybe they say it's going to last 5 years, so it'll fit with the example we're going to look at here in a minute. No, they think it's going to last 10 years, 10 years. They depreciate that equipment for 2 years, and during the 3rd year, they realize that that equipment only has a 5-year life instead of a 10-year life. Well, you could say, well, geez, they messed up because they thought it was supposed to be 10 years instead of 5 years. FASB does not do that to us. FASB simply tells us, look, take your new estimate and go forward with it. You don't have to go back and restate anything. Just take whatever book value is left at that point in time and depreciate it over whatever the remaining life is. Okay, so if you take a look at some of the things that we consider change in estimates here, the most common one that I'll probably hit you up with is change in life of a fixed asset. So let's just take a look at that. And you take a look at the example here, and we have this Carlin company buys a truck for $90,000, and they expect it to last 10 years. During the 3rd year, they realize that the truck is only going to last a total of 5 years, and so how should we handle that? Well, if you take a look, they were originally depreciating the truck and they assumed no salvage value here over a 10-year life. So they took $9,000 the first year, $9,000 the second year, didn't they? Okay. Then what happens? Well, if you had $90,000 and you took these 2 years together, mean that you take an $18,000 of depreciation on this thing, haven't you? So the remaining book value at the start of year 3 is $72,000, right? With me so far? Okay. Now, if we thought the thing was going to last 10, but now we think it's going to last 5. If we think it's going to only last 5, we've taken year 1, we've taken year 2, haven't we? So that means there's 3 years